year or so, we have seen, in my opinion, the BRICS countries employ what is very much like a three-pronged approach to accumulating commodities. And the first one, I would argue, is that they have been gradually depleting the above ground stockpiles on the Western exchanges. And they have been. We saw 8% of the LBMA silver float delivered in the month of August. We've been seeing for 3 years now huge deliveries, whether they be an exchange for delivery, where contracts are bought on COMEX and delivered to Brinks Hong Kong. That's an exchange for delivery contract that was built or came into play in 2015, 16, or 17, and it's been exploited quite a bit since. But we're seeing metal come off, being delivered off of the Western exchanges very meticulously, using the suppression of the Western paper market, which is massively short. The commercial banks are holding down the price of gold and silver to the best of their ability. They're caught, and in the respect that these countries now are coordinated and motivated and sophisticated, and they're standing for delivery. This is something that never happened before. The second thing they've been doing is we've been seeing these types of products grow, or the exchanges that are trading these products in their regional capacity. What I mean by that is that, for example, you see the Shanghai Metals Exchange, and over the past 6 months, the combined volume of the Shanghai Metals Exchange and Futures Exchange has increased 500-600%. It now actually outpaces that of the COMEX. It is the second most actively traded metals market in the world. And unlike the COMEX, which is massively rehypothecated, the Shanghai Metals Exchange, to buy a bar of silver, you have to buy it from an approved refiner, one of 6 or 7 that they have. They laser etch a number on it, and that is then directly attributed to your bar. Where on COMEX, the rehypothecation or the reselling of the same contract over and over and over again approaches 15, 16, 1700%. Lastly, they've been flying, like China, as an example, has been flying all around Latin America. They're flying around Latin America. They're going directly to the miners, and they're saying, we will buy your doré bar, which is a crudely refined bar by the miner before it gets sent for further refining, maybe 40, 50% pure. and concentrate, which is a byproduct, it's like sludge. They're buying it, paying much more than the West will, and shipping it back to China to further refine, disintermediate it from the markets and the exchanges and the commercial banks. They're already the second largest producer of silver in the world. You have India importing 800 or 900 million ounces of silver, depending upon who you read, over the last 4 years. You have Russia now accumulating gold daily and now saying they're going to accumulate silver, platinum, and palladium. No country's ever said that. You have all of these countries that understand that resources are important and are moving in this direction. And for them to come out and say we want to issue an exchange, a metals exchange that will challenge the COMEX and the LBMA because they're fraudulent, more or less, because they are rehypothecating so very much of the ownership, it's a very big deal. And will it happen? I guess we'll see. But these are the countries that have been buying it, accumulating it, and repatriating it. Wouldn't surprise me one bit to see something like that come, and as a very detrimental threat to the West, who is paper naked short massive amounts of gold and silver, where real price settlement would actually flourish, opposite to the way that the markets are traded in London and in New York.
Over the past year, we've witnessed a profound transformation in how the BRICS countries are handling their resources, specifically through what Schectman calls a three-pronged approach. This approach underscores a strategic shift away from Western financial systems and exchanges, marking a significant departure in how commodities like gold and silver are being acquired, traded, and stored. The first aspect of this approach is what Schectman calls the depletion of above-ground stockpiles on Western exchanges. He explains that countries like China and Russia are taking advantage of Western paper markets, such as the London Bullion Market Association, LBMA, and the COMEX, to buy up massive quantities of metals at suppressed prices. For years, these Western exchanges have kept metal prices relatively low by selling futures contracts and other paper claims on gold and silver. This tactic has held down spot prices, but it's also created an opportunity for savvy investors and governments to accumulate physical metal at discounted rates. In fact, Schectman points out that, in August alone, a staggering 8% of the LBMA's silver reserves were delivered. This type of aggressive purchasing is highly strategic, as it quietly drains Western vaults without triggering alarm in the markets. By standing for physical delivery on these paper contracts, BRICS countries and their allies are effectively shifting tangible wealth out of Western control. What's more, this strategy is proving highly effective, as Western exchanges struggle to meet the physical demand while maintaining their short positions. Schectman's insights reveal a critical vulnerability in the current system. While Western banks continue to short-sell metals, betting that prices will remain low, they're also gradually losing control of physical supplies. In other words, while they may manipulate paper prices in the short term, they can't prevent the physical transfer of gold and silver to other regions. As BRICS countries continue this methodical accumulation, they're effectively building a shield of real assets against currency devaluation and the instability of the fiat system. The second part of Schectman's analysis focuses on the rise of regional exchanges that are outside Western control. The Shanghai Metals Exchange, for example, has seen explosive growth over the past 6 months, with its trading volume increasing by over 600%. The Shanghai Exchange now rivals COMEX in trading activity, and its appeal is rooted in a fundamental difference. Unlike COMEX, where a single bar can be rehypothecated, or effectively resold, up to 1,700%, Shanghai's metals trade is tied to physical delivery. This means that buyers on the Shanghai Exchange receive specific, identifiable bars, complete with laser-etched serial numbers, directly from authorized refiners. This growing preference for physical-backed trades highlights a seismic shift in how the world views precious metals. For years, the COMEX and LBMA have been the primary players in global metals trading, but their reliance on paper contracts has left them exposed. By building regional exchanges with physical backing, countries like China are offering an alternative that is more transparent and reliable. Investors worldwide are beginning to recognize the benefits of this model, moving their business away from Western exchanges and signaling a profound lack of confidence in the existing system. Now let's move to the third prong of this BRICS strategy: direct commodity sourcing from the source. China, for instance, has been actively securing metal supply deals directly with mining companies in Latin America. They're not just buying refined metal, they're going straight to the miners and purchasing raw materials like door bars and concentrates at premium prices. A door bar is a roughly refined bar, typically about 40 to 50% pure, which requires further processing to reach investment-grade purity. By buying these raw materials directly, China bypasses traditional Western refining channels and keeps the refining process within its own borders, enhancing its control over the entire supply chain. This direct sourcing approach is about more than just cost savings. It's a way for BRICS countries to establish greater independence from Western-dominated financial networks. Rather than relying on the London or New York markets, which are susceptible to manipulation and controlled by a small number of large financial institutions, they're building a system that circumvents Western influence altogether. This strategy also enables these countries to store their metals domestically, which is key to protecting their assets in the event of financial sanctions or market volatility.
It's always been in the back of my mind that it's strange that the BIS was involved in this. But it was a plan for, in fact, Elma Rousseff, when she came out and announced that in principle, we've agreed to a new settlement currency called the unit that is traded over Enbridge, that will be 40% backed by gold. And we've talked about that a lot. I have in a lot of my podcasts, but this was what everyone was expecting, that they would issue the unit, that it is a settlement token that would be traded over Enbridge and give these countries the ability to settle outside the dollar. And it really focused on gold. And of course, there is something called BRICS Clear that does focus on gold, which we can talk about after. But it was always something that kind of bothered me in the back of my mind. And when Michelle said that, it kind of the ding, ding, ding went off. And I've really been thinking about it a lot lately. This was just maybe 2 weeks ago that her and I spoke. And, I guess, the old saying, fool me once, shame on you. Fool me twice, shame on me. The BIS has come out and, under Western pressure, I guess, recently said that they may pull the plug on this. We hear a spokesman for the State Department come out just the other day and say alternatives to the SWIFT system and undermining of the dollar's role threaten global democracy. Really? So, an alternative to your system, one that benefits the majority of human population. The amount of countries that would benefit from this to build their own economies by trading, these developing nations, by trading over umbrage in a basket of local currencies would only strengthen their own economies. But evidently the United States believes that this is a threat to democracy, and that we could never allow that happen. So the BIS came out with a statement saying they're debating on whether or not to shut down the umbrage project. It says a pilot cross-border payments platform, which promises to allow sending money around the world without relying on U.S. banks. And some of the interesting things about it is, you have Augustin Carstens, the BIS general manager. Here they are building this, the innovation hub, building it with these countries with it in mind to be the BRICS payment system. And he comes out after it's now operational. And he says, we cannot directly support any project for the BRICS because we cannot operate with countries that are subject to sanctions. I want to be very clear about that. Where the hell have they been for the last 2 years, 3 years in its development? And then you get someone named Agaf Demarius, a senior policy fellow at the European Council of Foreign Affairs. In the long run, there is no doubt that the mechanisms like BRICS Bridge could be useful for China and Russia or others to hide sensitive transactions from Western authorities. And the underlying technology is a tool to circumvent sanctions and potentially undermine the dollar's dominance in the global financial system. I mean, if you couldn't put a bigger nail in the coffin of the dollar's hegemony, I don't know what is. I mean, this is only going to strengthen the resolve of these countries to push away from what to them and to the world, just if you take a step back and try to be, neutral about it, is never-ending hegemony, holier than thou attitude, where if anything tries to challenge the SWIFT system and the dollar hegemony, it is a threat to global democracy and must be put to an end. It's very interesting that they did this at the 12th hour, right as it's been released they called it minimum operational form. It was, in its basic form, but had big plans for rolling this out, and now they're trying to put a knife in it. I think it's interesting.
Continuing with Andy Schectman's detailed analysis, let's further explore the profound implications of the BRICS nations' approach and what it means for the future of the global economy and individual investors. The strategies these nations are employing are not merely reactive or temporary. They reflect a carefully orchestrated plan to establish a new financial order, one that operates independently of Western control. If successful, this shift could fundamentally alter how global trade is conducted and how wealth is preserved. One of the most ambitious moves by the BRICS nations is the potential creation of a BRICS-backed metals exchange. Western exchanges like COMEX and LBMA have long dominated the precious metals market, but their reliance on paper contracts and rehypothecation has left them vulnerable. As Schectman points out, the level of rehypothecation on COMEX, where the same physical metal is effectively sold multiple times through contracts, creates a high-risk environment. If too many investors demand physical delivery, the entire system could face a severe liquidity crisis, exposing the extent to which the market is leveraged on paper rather than tangible assets. The creation of a BRICS metals exchange would be transformative. Unlike the heavily leveraged Western exchanges, a BRICS exchange would prioritize physical settlement, ensuring that each contract corresponds to a specific, traceable bar of metal. This would not only restore confidence among investors, but also offer a truer reflection of the metal's market value. If the prices on this BRICS exchange begin to diverge significantly from those on COMEX or LBMA, it could expose the artificial suppression of prices in Western markets. Such a scenario would likely prompt investors worldwide to migrate toward a market where pricing is based on physical reality, not on paper speculation. Moreover, the impact of a BRICS metals exchange would extend beyond financial markets. By establishing a system that operates independently of Western financial institutions, the BRICS countries could foster stronger economic ties within their bloc, creating a robust trade network that is less susceptible to external pressures or sanctions. This development is particularly important in an era where sanctions have become a common tool in Western economic policy. For BRICS nations, the establishment of a metals exchange is not only a financial strategy, but a geopolitical one, a way to exert economic sovereignty and reduce their dependency on a dollar-dominated system. The second element of the BRICS strategy is their approach to commodity sourcing. By securing direct deals with resource-rich countries, BRICS nations, particularly China, are cutting out Western-controlled supply chains. These countries are purchasing raw, partially refined metals like door bars directly from miners in Latin America and Africa, then transporting them to domestic refineries. This not only lowers costs, but also keeps the refining and value-added processes within their own borders, allowing them to maintain full control over their supply chains. This strategy of direct sourcing is about more than securing metals. It's a way for BRICS nations to deepen alliances with developing countries, fostering long-term partnerships that could lead to broader economic cooperation. By offering better prices and fairer terms than Western buyers, BRICS countries are positioning themselves as reliable partners for these resource-rich nations. This approach could lead to a reconfiguration of trade relationships, with countries in Africa and Latin America aligning more closely with BRICS than with traditional Western economies. The third pillar of the BRICS strategy involves the development of an independent settlement currency, or unit, that could rival the US dollar. This BRICS currency, though still under development, is expected to be backed by a basket of commodities, including a significant portion of gold. This move would provide BRICS nations with a mechanism to settle international transactions without relying on the dollar, effectively circumventing the SWIFT network, a financial messaging system controlled by Western banks and often used as a tool for enforcing sanctions. Schectman explains that this unit would be facilitated by Embridge, a digital payment platform specifically designed for cross-border transactions within the BRICS bloc. Embridge offers an alternative to SWIFT, enabling BRICS nations to trade without fear of Western interference. This system could be revolutionary as it would provide a way for countries to engage in international trade while keeping their financial affairs independent of Western influence. The ramifications of such a system are vast. If Embridge gains traction, it could pave the way for a multipolar currency system, one in which the dollar is no longer the sole currency of global trade. The US and its allies are well aware of the potential threat posed by this new currency system. Recently, officials from the Bank for International Settlements, BIS, have suggested that they may withdraw their support for Embridge, citing concerns over sanctions compliance. Some US officials have even claimed that alternative financial systems could undermine global democracy. From a BRICS perspective, however, these statements only reinforce the need to create a system that allows them to operate free from Western control. The pushback from Western financial leaders underscores the high stakes involved. A successful BRICS payment system could drastically weaken the dollar's dominance and offer countries an alternative to the Western-led financial order. For individual investors, the significance of these developments cannot be overstated. The dollar-centric system that has dominated global finance for decades is now facing unprecedented challenges. In this environment, holding a portion of wealth in tangible assets, such as gold and silver, becomes not just prudent, but essential. Precious metals are universally recognized, immune to inflation, and independent of any one nation's economy. They provide a hedge against both currency devaluation and geopolitical instability, both of which are likely to increase as the BRICS bloc continues to gain influence. Silver, in particular, offers unique advantages in this changing landscape. While often overshadowed by gold, silver has significant industrial applications in technology, renewable energy, and medicine. Its dual role as both a precious and industrial metal gives it unique resilience. When the economy is expanding, industrial demand for silver rises, particularly in sectors like electronics and solar energy. When the economy contracts, silver's role as a safe haven asset comes to the forefront, making it an excellent addition to a diversified portfolio. For investors, silver represents an accessible entry point into precious metals, offering affordability and versatility. The broader implications of the BRICS shift toward a gold-backed currency are also worth considering. While a full return to the gold standard may seem improbable in the short term, The growing interest in gold as a reserve asset signals a waning confidence in fiat currency. Central banks worldwide have been buying gold at record levels in recent years, a trend that reflects a broader recognition of gold's value as a stabilizing asset. Even if a formal gold standard does not emerge, the market is moving in a direction where gold plays an increasingly central role in maintaining financial stability. In conclusion, Andy Schectman's insights highlight a pivotal moment in global finance. The BRICS nations are not just accumulating commodities, they're constructing a new financial architecture. The traditional dominance of Western exchanges, fiat currencies, and the SWIFT network is being challenged by a coalition determined to create an alternative system. The rise of gold-backed currencies, physically settled metals exchanges, and independent payment systems signals a shift that investors cannot afford to ignore. Thank you for tuning in to this comprehensive analysis. Stay informed, stay prepared, and consider how precious metals might fit into your financial strategy as we navigate these transformative times. Remember, history shows that those who understand the shifts in power and prepare accordingly are best positioned to weather any storm.